When diving into Forex trading, you'll encounter terms like pip, leverage, spread, margin, bid and ask, and more. Let's break them down. A pip is the smallest price movement in the Forex market. It's how traders measure price changes. Leverage is borrowing money to increase your trading position. The spread is the difference between the buy and sell price of a currency. Margin is the amount of money required to open and maintain a leveraged trading position. It's essentially a good faith deposit. The bid price is the highest price a buyer is willing to pay for a currency. The ask price is the lowest price a seller is willing to accept. This has been Forex in 1 minute. If you like this content, subscribe, like, and share this video. And let me know in the comments which terms you want to learn about. See you in the next video.